Thank you for joining us for today's webinar, How to Utilize Rifle Charts on Lightspeed Trader. This is going to be presented by Doron Yowitz, Master Trader and Education Specialist at Alpha 7 Trading. Alpha 7 has done multiple webinars for Lightspeed in the past. We're always excited for them to share some of their interpretations of the charts and trends, and it's really nice to see how they utilize the Lightspeed Trader charting to really analyze some of the intraday movements and strategies that they like to teach in their educational programs. Before we get started, I just want to do a quick disclosure. Please note this webinar presentation is for educational purposes only. This is not intended to buy, sell, or hold any specific securities, any recommendations or advice or investment guidance. This is strictly for education, as well as Lightspeed is not affiliated with the presenter in any way. This is strict, all views are strictly contain those of the presenter. Please note that there are plenty of risks involved with day trading, and we provide these disclosures on our website, as well as any new account application. You must be aware if day trading is suitable for you. You should be aware of all the risks involved with day trading on margin, and make sure that it's suitable for you. Feel free to contact us with any questions regarding the risks or suitability for day trading, but be sure to take a look at all the disclosures and make sure that this is a proper vehicle for your investments. With that being said, we like I said, we are happy to have Doron present to us. Alpha 7, it's alpha7trading.com. Was created by many professionals. They have a lot of experience in proprietary trading, including programming and automating of trading platforms, many different intraday trading strategies and techniques, and analyzing charts and trends and studies. So we're really excited to have them show some of the ways that they are interpreting the charts here. So without further ado, I'm going to shift the presentation over to Doron and have him get going here. And everyone feel free to ask questions as we go, and please note this webinar will be recorded for future use on our website and also on the YouTube channel, and you'll be able to view that in the future as well, along with our other webinars. So my name is Rob Lifson. Feel free to call or email or type in questions as we go here. Thank you very much, and here is Doron. Thank you.
Hey everyone, good afternoon. You guys hear me all right? Can I get a couple yeses?
Sounds good.
Sounds good? All right, there we go. People are active. Now, guys, today we're going to be going over how to utilize the rifle charts on Lightspeed Trader. Now, before we move forward, I just want to kind of have you guys get an idea of how I present. It may be a little bit different than others that you've been in. Now, I'm the type of person who doesn't mind to be, you guys can ask questions at any moment, even if I'm in the middle of a sentence. I believe that if you have a question, it must be that you're interested in learning, and in order to be able to retain that information, it's best to be able to answer it as soon as possible. Many times, if I wait till the end of the webinar for you guys to pen out your questions, some of you will even forget them, and then you'll never know. So please be active. I love active webinars. I love to talk. I love to be interrupted. That means that people are listening. They want to understand the education, and that's it. We'll begin. Also, Rob, thank you for having us again through Lightspeed to spread our knowledge, and let's begin. Now, before we go over the benefits of the webinar, everyone, I want to show you a visual aspect of the rifle charts. Does everyone see the rifle charts here on Lightspeed? All right, good. Now, the way it works, before I move forward, just so you could follow through for the rest of the webinar, we have Apple here on top, okay, and we have SPY on the bottom. Now, it goes in order. I know it's weird, but this is just how I've done it from the beginning. So the 1 minute starts from the right and increases all the way to the left. Okay, instead of left to right, I'm right to left. So we got the 1 minute, we got the 5 minute, we got the 15, we got the 60, and we got the daily. Same thing on top, same thing on bottom. That way we can have a visual, full visual aspect of the stock and also the indice or the ETF of an indice. Okay? Now that we have that out of the way, let's go back to the webinar presentation. So, what are the rifle charts and how could we use them to benefit in trading? So the first thing that you're going to learn is you're going to understand why multiple time frames are one of the most important things and nuances to be able to use when trading. By limiting yourself to only look at 1 or 2 time frames, you're not getting the full perspective of what the market is really doing or what the stock is really doing. And this is what we like to use or say what lurks beneath, right? And you can see that on the bottom here. And in order to understand how to utilize multiple time frames, just because you have them up, okay, doesn't mean you're going to be able to dissect them. So we need to understand a few laws that we've built in order to be able to utilize the multiple time frames. So the few laws that we're going to go over is laws of linearity, laws of foreshadowing, and laws of transparency. With those 3, we're going to be able to understand exactly what is going on as we look at the big picture, the big scheme of things. As we move forward with the webinar, each time we go over a specific characteristic of the rifle chart, I'm going to go back into the laser platform and we're going to open up a blank chart and create a rifle chart together. This way you guys could experience it, maybe do it on another screen while I'm explaining it. Whatever it is, it's great. The next thing you're going to learn about rifle charts and how they benefit is target projections. Now I know this is a huge, huge advantage because a lot of people understand where to get in, right? Getting in is half the battle. The real important battle is where to get out, right? What's a good place to get out? This way you don't regret later on. Did I get out too early? Did I get out too late? All this will be eliminated by utilizing the rifle charts. And what's great about that is that what I mean by eliminating is eliminating emotions, impediments, things that grow on to your trades and then are left off residually on yourself and emotionally for your next trade. For instance, let's say you got out too early and you were contemplating that you wanted to get a couple 15 cents more. So now you're pissed because you missed the 15 cents extra, so what do? Most people will probably try to find a place to re-enter. Then they re-enter off of not being able to take a full advantage of it, which is regret, and possibly revenge trading. Okay, and at that point, now you're putting yourself in a downward spiral. Does everyone understand that? How that could work out? Maybe I could get a couple answers. If not, I could. Okay, good. Please, guys, answer. I like when there's activity. Then I know that I can move forward and with excitement as well. Next, learn and understand how to utilize bumpers. Now, I'm going to go over bumpers a little bit later, but bumpers are basically the characteristics of the rifle charts, what consists of the rifle charts. And those are bumpers. Think of bumpers like a ping pong machine, pinball machine, right? You have that marble and then it hits those little things and it bounces off. That's what bumpers are on a chart. Next, I'm going to provide nuances that could provide insight into what the market really wants to do. For instance, to give an example, a Bollinger Band hook, which I'll go over later. And all that together, my goal here today is that you could get a better understanding and a better perception at what the market is really doing. And by understanding it, if you could really understand it, then the next step is acclimation. Now, acclimation is very important. It's one of the most crucial steps in our education. And acclimation is basically looking at the charts, seeing how it works, seeing how it's actually working, and then being able to get acclimated to seeing it and then using it to increase your performance. You're fine now. Okay, you got the volume. Perfect. So we can move forward. Now, excuse me. The first key ingredient in the rifle chart is a stochastic oscillator. Now, stochastics are a momentum indicator. We're going to use the fast plot, okay, for the location of the current price in relation to the range of a certain number of prior bars. Stochastics are used to measure overbought or oversold conditions on a scale from 0 to 100. Now, originally, or what most people use is above 80 is considered overbought and under 20 is considered oversold. Okay, Bill, we'll go over the rifle chart. That's what we're doing now. So this is the first piece, Bill, of the rifle chart, the stochastics. You got that, Bill? So with that being said, you got the fast K, the fast D, the slow K, and the slow D. Now, I'm going to break out here for a second, and we're going to open up a new chart. Now, to open up a new chart, you go to the Lightspeed mainframe, and you go to New, and you just do charts. And that's how I opened up this chart. So it's a 5-minute Apple chart. By the way, guys, you see the earnings over here? Not bad, not much, huh? So anyways, we're going to right-click on the chart, okay, and we're going to go to Studies. So the first thing we're going to do is we're going to look for stochastics. Okay, and then the K-bar is going to be 15. Okay, the slowing bar is going to be 3. And the D-bar is going to be 5. And this is under the SMA. And the colors, what I would suggest you guys do is look for contrast, right? One red, one blue, or one red, one white, or one blue, one white. This way, when they intersect, you're able to see those little nuances. You wouldn't believe how such a small nuance could make a difference in the way you see the chart. All right? So, 15, 3, 5 in that order, and we click OK. Now, if you want, you could have the line width medium. Oh, well, that's for the price. Okay, medium right here. And then click OK. And it didn't show, and I bet I know why. I didn't click Add. Okay? Sorry about that, guys. 15, 3, 5. Okay, we'll make that medium, and we'll click Add, and boom. We have him here. Yes, great question. They're the same on all time frames, and I'll give you a hint. That is what that's based off of laws of linearity. Well, you shouldn't really have a problem with Lightspeed. Lightspeed actually, the way they carry the memory is very small. I mean, you should look at other platforms. They take about 4 gigs of RAM. This one's taking nothing, and I'll just show you right now, if you guys don't mind, since that's question. That's why I like questions during. Okay, I have 16 gigs of RAM. All right, not here to show off, but look at Lightspeed. Only 103,000 kilobits, right? So not much. It's not running much. And if you look at performance, I only have CPU usage of 7% and only 4.4 gigs being used. So you should really check up on that and make sure you have enough RAM. That could be an issue. But in all reality, Lightspeed carries on a computer pretty well without crashing or taking up too much memory. So yes, John, it is on all time frames. Does anyone have any questions on how to add the stochastics before we move forward? Yes, absolutely. You see it? Charles? So we got the stochastics in. All right, let's go next. So what do we want to see from the stochastics? All right. Now, what we want to see is we want to be able to know that the 80 band and the 20 band are basically bumpers. These are the first bumpers. All indicators are lagging indicators in reality, Silk Road. Wouldn't you agree? Right? So we should only take a certain amount of information. That is why, Silk Road, and that's a great question, that's why we don't only use one indicator. Think about it this way, guys. The more factors and components that work in your favor, the stronger the probability of the trade. Would you agree? That makes sense? So now we're going to take that stochastic and we're going to add other factors into it, so that way we have many factors to agree with at once. And you guys are probably starting to see how this is all coming together. So once again, all we're looking for is we're looking for that the fast to cross up when the trend is either moving upwards, or the fast to cross down when it's moving lower. And we're looking for those key points at the 20 band and the 80 band. All right, and we'll go more into this a little bit later once we add more of the rifle chart components. Next, moving averages. How do I unlink all the charts from order and boxes? Okay, so what you do is you right click. It's very simple. Right click, unlink. You see that? Christopher Carter? You're most welcome. All right, so now, moving averages. So the moving averages we want to be using, guys, just adding the webinar again. Okay, so we want to be using the 5. I'm going to type, I don't know if I could type it in the chart. Moving averages, we want to use the 5, 15, okay, and 200. 5, 15, and 200. Now, we don't really care about moving average crossovers. Everyone knows about moving average crossovers. All I'm really trying to point out here is that which moving averages we're using, and at the same time, for people who may not understand moving averages, the shorter period is considered the fast moving average, while the larger period is the laggard. When the fast moving average 5 period crosses over the laggard, this means that there's a change of direction, okay, indicated by the price action, and vice versa. That's all we need to know. We're not going to be using it much, okay, but this gives you a basis of what moving average is for. But what we mainly use moving averages for is for bumpers. Once again, you're hearing this term again, bumpers. What is this bumper? Keep it in the back of your head. So we're going to get out of here, and we're going to add some moving averages. So we're going to right click again on the chart, and we're going to go to studies, and we're going to look for simple moving average. So we already added the 20. I'll just remove it, okay? So we're going to add the 5. Now the 5 we'll put blue. Okay, make sure it's bright, and you click add. Okay, then we're going to add the 15, and we're going to make that red. Right, good contrast, blue, red. And then lastly, 200. Since the 200 is so far away from your other moving averages, you could even keep it the same color as the 5, let's say, right? Because you're not going to see them intersect that much. And if you do, you'll still be able to tell the difference by the curve. Does everyone understand that? All right, so we'll make it blue. And then we'll click add. So now we have, and I'll just change the color. That's too dark of a blue. We'll make it a baby blue, sky blue. All right, much better. All right, so far everyone okay with how to add moving averages? All right, good, good, good. So let's move forward. Now, lastly is Bollinger Bands. Now, Bollinger Bands are a price range indicator that measures the highness or the lowness of the price relative to previous trades. Prices are considered high at the upper envelope, which is right here, and low at the lower envelope line, and the data input takes into account a number of periods and standard deviation. We use a 20 period and 2 standard deviations. Now the 20 period is the same as a 20 period moving average, a simple period moving average, but we're not going to add it as a simple moving average because the Bollinger Band already adds that component into it, right? So we're going to skip this, click on the chart again, go to Studies, you're going to look for Bollinger Bands, and now look at that. Right away it's already 22, right? So we're going to, we don't have to change the color, I'll just change the mid one to yellow. and you can see that the average bars is 20, and the standard deviation is 2. And we click add, don't forget, and boom. Voila, we have the rifle charts, guys. Anyone have any questions so far, or are we able to continue to move forward? Looks like we're able to continue to move forward. So, now that we have all the components put together, what's important about the Bollinger Bands? What do we care much about the Bollinger Bands? Now, this is very important, guys, so keep air. Bollinger Bands is almost like a breathing organism, okay? It's going to have this oscillation of contraction and expansions. Contraction and expansions. And it does this all day, guys. Start looking at it, and you're going to start seeing this contraction and expansion pattern. So you can see here that we start contracting, contracting, contracting. Does everyone see that here? And then after the contraction, and it becomes so tight, compressed, 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 there's only one thing for it to do. What is that, guys? Can someone answer that? Yep, it should expand, right? And that's where we start getting that expansion, huge, nice breakouts, fluid follow through, okay? That is what you want in this type of market. The type of market that we have today, guys, is what I like to call thunderstorms and tumbleweeds. Okay, and the reason for that is because the type of market that we have is one moment, one period of time, you can have huge volume, good volatility, nice moves, and then out of nowhere it just dries up and we're in a drought with those little things from the wild, wild west moving, you know, down the street. You know what I'm talking about? And that's the type of market we have. So we have to be very careful into when we want to enter, because having setups is not enough. You could have a perfect type of setup strategy, but if you're not getting in at the right time, you're losing the battle. Okay, so just having the nice strategies and having strategies that people don't have is half the battle. You still have to know how the market is reacting in totality and also on a micro scale in terms of the stock itself. So BBs also act as nominal target levels to the upside and downside. And this, once again, is a bumper, guys. All right, so most importantly, when a stock is trending, the BBs or Bollinger Bands will continue to expand in that direction until it exhausts, and then contraction takes over again until the next expansion period. This is like a heart that contracts and expands. Anyone have any questions so far, or can I move on? All right. So now that we have all of it together, you can see how it looks. We have the Bollinger Bands in, we have the moving averages in, we have the 5, the 15, the 20, the bottom BB, the upper BB, the 200, and the stochastics. Okay, now volume is also needed. I just didn't add it here so that way I could fit all the charts nicely for you guys to see. All right. So, how do you set up the multiple time frames? And what charts specifically do you need to use? That's the next step. So, the time frames that you want to use is the 1 minute, I apologize. Is the 1 minute, the 5 minute, the 15 minute, and the 60 minute. Now these are the intraday values. Can anyone tell me why those are the intraday values? How come the daily, weekly, and monthly are not intraday values? And the reason why I'm asking is some people do have this confusion or misconception. Can anyone answer that? Yeah, well, anything above 60, a chart, exactly, division of 1 day. So a chart will only have one candle for that day, or for that week, or for that month. So it's not calculated on an intraday value. All right? So the most important ones for an intraday trader is the 1, 5, 15, and 60. Daily, weekly, and monthly are wider time frames, and they're not gonna really reflect so much during the day for you as the shorter time frames. However, they're very important, and I'll explain why. We have a very important saying here, which is the wider time frames hold the strongest undercurrents. Can anyone tell me what that means? The wider time frames hold the strongest undercurrents. All right? This basically means that the wider time frames, each candle holds a lot more weight in terms of the price and where it belongs and the direction that it's taking. So if the daily, the weekly, and the monthly are moving down, but we have the 1, 5, 15, and 60 moving up, do you think the 1, 5, 15, and 60 will have a greater chance of moving up or a greater chance of going back down? Exactly, because the wider time frames dictate the real direction. So while people are looking at the 1 minute and 5 minute and they're saying, oh man, it's going up, let's get this trend, they're not seeing that the real direction is actually downwards. So as they're trying to get in on a long, they don't realize that that's just a pullback, so that way they could push lower even stronger. Right? And this is a very big misconception and a very big problem that a lot of people have, and you need to practice being able to understand that every chart, every time frame has a certain characteristic that will tell you a story of the stock itself. So make sure to set your time frame for pre and post market data. It's important that you have all the data so that way the rightful charts have the right increments and the right data that's being added. I would maybe try looking at the 1, 5, 15, and 60. Try doing it my way. You may like it better, maybe not. Maybe you could pull it to your other way. Maybe what you should do first is try the 1, 5, 15, 60, get the idea, and then try to add it to your time frames. Okay? But I'm not sure. All right? And I don't want to give you a direct answer because I don't know. So if you have enough screens or screen space, you should have at least 1, 5, 15, 60 daily chart for any equity of your choice and SPY below to be able to compare the correlation between overall market and the equity of your choice. Just like I have it, right guys? So we got the 1 minute Apple on top, we got the 1 minute SPY on the bottom. We got the 5 minute Apple on top, we got the 5 minute SPY on the bottom. Now we could see easily through here, is Apple 5 minute and the SPY 5 minute, are they correlating or not? Good. Okay, so this is the next step that we're going into in terms of the education. All right? We have something called the 3 market concepts. All right? Now the 3 market concepts are correlation, convergence, and divergence. Now you're probably laughing, this is simple stuff. What do I need to know? This is the first thing I learned. But believe it or not, this is the foundation for any successful strategy. If you do not adhere to these rules, it's going to be very hard for you to find consistency in these type of markets. Okay, and I'll explain why. Number 1, we have correlation. What is correlation? Correlation involves 2 entities that are moving in the same direction for a limited duration of time. Now, the key word here is 2 entities. 2 entities because you need to be able to evaluate a relationship between 2 entities. Okay? And the reason why I say this, because if it doesn't involve 2 entities, then what's the difference between convergence and correlation? Right, guys? So, the opposite of correlation is called apathetic correlation. And I'll type that in. Apathetic correlation. And what apathetic correlation basically means is that there is basically no correlation whatsoever. And I'll give a statistical lesson on this. So correlation in statistics is either a -1
and
or
that's
all the
what I
way
was
to a
asking Laura. I was like, is that even okay to do? And she was saying,
I'm sorry? I don't think he knows he was on the mic. Sorry, guys. So -1 and positive 1.
Yeah.
All right?
And I'm like, okay, well.
So a positive 1 and it is perfectly correlated. Negative 1 is negatively correlated, but there's still a perfect relationship, just opposite. So apathetic correlation would be 0, right? Where SPY is going up and the stock is going sideways. Does everyone understand that? It's important to understand the differences. Okay, good. Good. Thank you guys for answering. I had audio. Did anyone else have issues with audio? Someone? It was probably on that end. All right, let me know if it happens again, please. And if you missed anything important, let me know. So anyways, with that being said, where did I leave off? Sorry. Okay, so convergence. Now convergence has to deal with one entity, okay, moving in one direction for a limited duration of time. So that means one entity. That doesn't mean we need Apple and SPY. We just need Apple, or we just need SPY. Okay, and to move in one direction for a limited duration of time, let me see, I believe I could draw here. I know I have the ability, I thought I had the ability to draw labs, pictures, No, okay, anyways, so do you guys see this area right here? I could even do it this way. This area right here, that's convergence. Does everyone see that? Because we have red candle, 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 right? That's convergence. Now, divergence is the opposite. It's when, I'll check that out. Thank you, John. Divergence is when you have one entity moving in opposite directions for a limited duration of time. So, divergence would look more like this area right here. Does everyone understand that? All right, guys? So this right here is divergence because it's moving in opposite directions. Down, up, down, up, down, up, down, down, and then it starts converging here, right? You got that, Joel? And this is important. There's a reason why I'm building to this, guys, and you're about to have that epiphany, like, wow, watch. So, with that being said, if convergence deals with one entity, and I may get into philosophy here, if divergence is only one, convergence and divergence only deals with one entity, guys, right? And Apple here is one entity. Would everyone agree about that? Apple is one entity? So if I want to, okay, good. Now let me ask you, if I break it down into different time frames, is that still one entity, Joel? Aha! Anyone remember from Coming to America? That spoon joke, right? This is the aha moment, all right, guys? This is where convergence really starts to make sense. Because even though we only use one entity, Apple, even if I break it to a 1 minute, 5 minute, 15, 60 daily, I could still calculate convergence within all these time frames and it's still one entity. Does everyone understand that? It's important to understand that. Okay. So, now remember, it's not a multiple entity because it's still Apple, right? It's still off of one thing. We're just breaking it in pieces, okay? So let's just think that way, even if you disagree, all right? Now what we want to look at is the stochastics at first because it's the engine in the rifle charts. Now what we want to look for is basically a scale. So we have, how many intraday time frames do we have here, guys? No, wrong. 4, right? 1, 1, 5, 15, 60. So we have an even amount of intraday charts that we're looking at. So let me ask you, let's say at the current moment, if the stochastics on the 1 minute are going up and the stochastics on the 5 minute are going up, but the stochastics on the 15 and 60 are going down, is that convergence or divergence? Yes, divergence. Now you guys are starting to understand how it's coming along. Now, if you have the 1 minute going up, 5 minute going up, 15 minute going up, but 60 going down, is that convergence or divergence? We got one answer. Joel, anybody else want to try? All right, so I found the misconception. It's convergence, right? The reason for convergence, okay, is because think of it as a scale. 2 for 2, no good. 3 for 1, the scale tips automatically to convergence. Does everyone see that? Okay? So, with that being said, now we understand in order to find clear price moves such as this nature, what are we going to have to find? We're going to have to find convergence. So now with what you learned, if I told you that, hey, there's a setup, but 2 time frames are moving up and 2 time frames are moving down, would you reconsider getting into that trade now? Maybe, right? Because why do you want to go? Think about it this way. Let's say the 1 and 5 are moving down, but the 15 is still moving up. Why do you want to move down when the 15-minute chart, which is the pivotal chart, is still moving up against you? You don't have clear price moves, right? You have things that are going against your direction. Think of it like you going against a wave, right? It's hard to trade against a wave, all right? You're always going to have things pulling back. The less forces you have going against you, the smoother the price action will be for you. Everyone understand that philosophy? All right? And this is where everything starts to come into play. So not only do you look for convergence, but you also look for correlation. Right? That's the next step. Not only do you want to find convergence, you want to find correlation, because if the SPYs are going upwards, who's to say that Apple's not going to fade back up? Right? So you want SPY to go down too as an additional support for you to be comfortable to take it down as well. Now that's a great question, John. Actually, it could be used both ways. Okay, and we're going to learn that in laws of foreshadowing. So let's move forward. How much time I got? All right, I got to move quick. So, laws of convergence, we just went over this. When multiple time frames exhibit the same pattern, the shortest time frames tend to be the trigger, which causes a domino effect, taking a seemingly dormant wider time frame pattern into detonation mode. The effects are magnified beyond the short time frame move as the wider time frames carry the movement to greater price levels, thereby magnifying the outcome. Simply put, when a powerful pattern forms on wider time frames, it will still remain dormant until the shorter time frames turn in the same direction. Okay? This is when the transparency starts to form and participants take notice. If that wider time frame is a powerful pattern, such as a pup, mini pup, which you guys don't know, you don't need to know, you could use your own setups, okay? Then aggressively will form oftentimes in a parabolic form. Laws of convergence implies that the most transparent movement occurs when patterns converge in the same direction on multiple time frames. Okay, any questions on that little paragraph right there? Okay, so the goal here, guys, is let's say you have a certain setup. Now, I know all of you have different type of strategies, but you could have multiple strategies on multiple time frames, all at the same time. Later, Joel, it'll be recorded. So that means you could find, when you find multiple setups happening simultaneously, ready to break, that gives even a stronger indication that you're going to have a big impending move. Okay? And that is where laws of linearity come into play. So, Any tool, indicator, or pattern used to trade the markets should follow the laws of linearity. In other words, they should apply equally to the 1 minute time frame as it does to the 60-minute or monthly time frame. They should be scalable proportionally and relatively. This means that a breakout pattern on a wider time frame should react relatively identically on a shorter time frame. Now the only difference is that the wider time frame has a bigger price range and it's going to take longer to develop, while the shorter time frame is going to have a smaller price range, but it's going to take less time to develop. Everyone understand that? Now, with that being said, this is why laws of linearity and laws of convergence come into play, and how convergence, correlation, and divergence come into play. Okay, because now that you have the rifle charts up on multiple time frames, you're able to find multiple uniqueness within multiple time frames that could provide insightful information that most people don't see. Thank you, Silk Road. Okay, insightful information, little nuances that other people don't know. And this is called laws of transparency. And what laws of transparency basically means, most simplest term, when there's transparency, there's no opportunity. The less transparency, the more opportunity. Okay? This basically means when the move is already out there and people know, it's already too late to get in. When the move has not been seen yet by most, then that's when the opportunity is at its best. Okay? So the last thing, and this is the question that Joel had, but he left, and the most important one, laws of foreshadowing. Now, the wider time frames, like I said, the identical powerful pattern formations carry the strongest undercurrents, as I said before. So what happens is when a trader is too focused on the short term, he will likely miss out on the extended moves as they always appear identically initially, just as a wiggle appears identical to a reversal initially before they start off the same. Now the way the laws of foreshadowing works is, let's say for instance you have a setup on the 60-minute, okay guys, and I'm going to give an example on this, but let's say you have a setup on the 60-minute, but it's way far away. It's about 40 cents far away before it triggers. However, due to that setup being seen on the hourly, you should already start looking on the 1 and 5 minute for continuation of trends to that area for the hourly setup. And at that point, you look on the shorter time frames for miniature setups that are ready to what's the word I'm looking for? To trigger at the same time for the hourly setup. Okay? Does that make sense? This way you could always plan ahead for the type of moves that you want. And this allows you to not chase the market. Instead, you let the market come to you. And this is a crucial piece of information if you want to be consistent. Do not chase the markets. Always look for setups beyond what the market is already showing you. And that is what laws of foreshadowing is. Look at the wider time frames that will dictate what the shorter time frames will do later. And by, yeah, John, we all did when we didn't have this education. We all did. So with that being said, this is a crucial way to be able to know when a move may work out or when a move may not work out. What do you need to know about stochastics? 15, 3, 5 in that order for Lightspeed. You're welcome. So, laws of transparency I stated before. This is the simplest law and most violated law. Transparency is what every participant wants to capitalize on before the next guy. The purpose of trading is to capitalize on transparency before it becomes too transparent, right? The most important thing on this is the one constant with the market is that no apex predator ever lasts once it has been spotted and labeled as such. And who's our apex predator? Algos. So even algos dry up the liquidity and start to fade back. So don't try to fight against it. Now, overlapping bumpers. So as I stated before, what are bumpers? bumpers are any of the components of the rifle charts. So the upper BB, the mid BB, the 5 MA, the 15 MA, the 200, the stochastics near the 20 band and the 80 band, and the 200 are bumpers. Now what bumpers mean doesn't mean that it's supporter resistant. Bumpers don't mean that they're targets or they should always be targets. What they mean is that they're reaction levels. When they reach those certain price levels, you're going to see a sort of reaction in the market. The market is going to take to effect and take into consideration that it's at a certain price level, and it's going to react a little bit differently. Now, we don't know whether it's going to break through the bumper or bounce and reject the bumper. We don't know that. If we knew that, we'd all be billionaires, right? But because we know that it's going to react near those price levels, we could use them as nominal target prices. Does everyone understand that? And this is the great part. This is where you're going to start seeing things to come even more and more into perspective and in together. So what overlapping price bumpers mean, okay, is when you see a 5-period MA on the 1 minute at the same place as the 20-period moving average on the 15-minute, right? They're holding the same price level. By two different price bumpers and two different time frames holding the same price level gives even more of a stronger sentiment to that level. Does that make sense to people? So let me give you an example here. We got the 1 minute here on the right, and we got the 5 minute on the left. Now look here. The 1 minute mid BB, okay, is right there, right at 93.75s or so, okay? At that same time, okay, the 5 minute rejected the 5 MA. So at this point in time, the 5 minute 5 MA was equal to the mid BB on the 1 minute. Do you see something happening here? Do you see this linearity forming within the charts together? How it's all coming together like it was meant to be? Yes? No? Maybe so? Could be? No? Nobody wants to answer? Okay. So, I tried. Alright, so with that being said, look out for those. Because most people, they may have stopped out here saying, oh, I'm going to get out. But someone who understands the rifle charts could see what lurks beneath. And what lurks beneath is that there's a huge, huge level of resistance here. Okay? And where we would place our stops would be above the mid BB and above the 5 MA on the 5 minute. And then we'd be able to carry it down. And what would be our target? If we reject and we held this and we took this down, after what we learned about bumpers, what would be our first target? Come on, guys. Let's see if you learned. Let's say we took it down here, right? You see here? Lower BB, my man, John Forte. Good man. There you go. So now you see that the rifle charts eliminate emotions. Oh no, where am I going to get out? Where should I get out? Oh no, I don't know. Maybe I should get out here. I see the SPY ticking up. You could have thousands of devils on your shoulder telling you to get out too early. Okay? However, now John, I'm gonna challenge you here. Now let's say, who's to say that this is the real low on the 1 minute, right? Maybe it's weaker. How do we know? We carry over to the 5 minute, right? If you think it's going to go lower but there's no more target levels, what do? You move to the next time frame. And when you move to the next time frame, right, where's the bumper? Much, much lower. You see it? You get that, John? So once you've exhausted your target levels on the 1 minute, that doesn't mean that the trade could be over. That just means that you should carry over to the 5 minute and continue taking it on. And this is laws of linearity taking place. This is how you take a trade from a 1 minute chart and you take it all the way up to an hourly chart, and you start trading off the hourly chart targets. Okay, this is laws of linearity. When things fall in place and you have clear price range, everything falls into place, and it's like a domino effect, breaking into each time frame. Right? So let me give you an example. Here is convergence, guys. Clear price range. Right? Clear price range. 5 MA, BB's down. Holding, respecting the 5 MA each time. And then diverging. Choppiness. Right? Stochastic choppy here, stochastic down, stochastic up, stochastic up. What does that equal, guys? Noisy chop. So now, when you start looking at the market and you want to trade, make sure that at least 3 out of the 4 intraday time frames are moving in your direction. And you can gain a lot more confidence because of that. So, as I stated before, and I gave you a hint before, you could find larger impending moves. And I believe this is the last part, guys. Okay? So, ever feel like you got out too early and wish you knew how to potentially foresee when a bigger move may occur? Okay, this is because, like I said, most traders focus only on the surface or 1 or 5 minute chart. Okay, so you want to look at the wider time frames. All right, and you can see here how we have a type of setup here for a pullback. So most people would have got in on the 1 minute, and they would have took potential targets at the upper BB, right around here. Now at the same time, at around 115, and this chart's a little bit choppy. It's a little, this market hasn't been so good, so I didn't have much of a choice, or a selection, I should say. So at this point, it comes back down, and most people will probably sell on this pullback. But if you see here, the 5 minute is also pulling back, but cannot break the 5 minute 5 MA. Does everyone see that? So the bulls are still in play here. That's what that means. The bulls are still in play. So as long as they're not breaking the 5 MA, I could continue to take this a little bit higher to the next upper BB. And by doing this, you're able to find that extra impending move. But in order to do that, there must be a setup on the wider time frame. If there's no setup on the wider time frame, there's no reason to start looking for targets on the next wider time frame. Okay, so only when you have multiple setups, okay, going into the wider time frames, can you then carry over your targets to the wider time frame charts. Okay, so when you feel that your position is overextended and you have no clue where to put your next target level at, we can look at things of this nature. Okay, so we could see here that the 1 minute, same way, had a overlapping bumper at the upper BB that was also close to rejecting the 15 MA right here. Okay, and at this point it rejected, fell back, pulled back, and we saw right here that the upper BB was rejected and was ready to cross down with the stochastics, converging once again with the market. So instead of taking profits here, we were able to take profits here. Yeah, this time, that's why I called. Yep, I have the 1 minute on the left and I have the 5 on the right this time. So, the first one that triggers is here. Target, right? Bottom BB, John? Oh, sorry, hang on. Going back to it. A sec. We're almost done, guys. So, 1 minute first. We hold. We didn't get stopped out. Okay, we held above the 5 MA, then we brought it down. Now obviously we're not going to take targets here again on the 1 minute, right? John? That'd be the same place as where we took before. So now you look at the 5 minute, because the 5 minute, what are the Bollinger Bands doing? They're expanding. And the 1 minute is helping with it. So now we're able to take the profits at the other bottom BB. giving us even more of a wider target price move. Okay, John? And with that being said, guys, we came to the pinnacle. We're done. I'm not a salesperson, guys. As you can see, I'm not really trying to sell, but I always give out some cool deal. This is a pretty nice deal. Level 1 and 2, it's exactly what you need in order to start off and become a consistent, profitable trader. And including in it, you have 3 months free of the chat room where I take live trades and 5 coaching sessions for the purchase, including it. Okay? And you need to go to the shopping cart. You can go to alpha7trading.com, then go to course overview. Make sure you have level 1 and 2 in the shopping cart in order for Lightspeed 30 coupon to work. All right. I also have my blog there, and I post my blog out there every day of what I traded. Today, guys, just to let you know, I did 5 trades, 5 for 5 today. Haven't finished posting it on the blog yet, guys. But we took Apple in the morning. Okay, we took Apple in the morning. 10 cents. Next one was 16 cents, 7 cents, 3 cents, and 6 cents, and that was it. Was 49 cents in total, average, 5 for 5, no losses, 100% profitability on a day like this, guys. Was looking to take Nugget, but every time it was just too quick. Didn't want it to ruin me. So kept it pretty nice and cool, and came out with a good day, guys. So, any last questions before we call it a day? Give about 5 minutes. Thank you, Marcelo. Thank you, Silk. If you guys want me back, just ask them. Yeah, now time to take a nap or a breather. I know the recording will be posted, Rafi. Check with Lightspeed. I don't know when they did the update, but check probably within 3 days and it should be on their website. My pleasure, Rafi. All right, guys.
Unmuted.
Yes, so the recording will definitely be on the Lightspeed website and our YouTube channel within just a couple of days. We thank Doron very much for doing that presentation. Great enthusiasm, as everyone was mentioning, very clear and concise, and we would love to have you guys back and do some more presentations in the future, so everyone please look for that. And everyone, take advantage of this great starter package promotion that they're offering here. Remember, it's alpha7trading.com. Definitely want to take a look and see what they can offer you. They've been doing it for a long time, so you know that they have a lot of good insight and education. And we would love to have you back. So thank you very much, everyone. I hope you enjoyed this and really got some really good information out of it. And hopefully you'll be in touch with Alpha 7, and just feel free to come back to Lightspeed with any questions. If you need a demo of Lightspeed Trader, you can do that as well. So everyone, have a great night. Thank you, and thanks very much, Doron.
Thank you, Rob. Thank you, everyone, for participating. You guys have a great weekend.
Thanks, you too. Take care.